The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, as we took a look at the end of the week trade on Friday, soybeans came under some heavy pressure, so we're wondering some reasoning there. Wheat found a little bit of a bid, and corn was largely caught in between, and cattle were kind of hesitant ahead of the on-feed report, while hogs had a little bit of strength. So overall, kind of a mixed bag to end the week. We want to talk about it and get some perspective. Joining us for a conversation here today on Market Talk, glad to welcome him back to the show, Mike Miner with Professional Ag Marketing. Mike, it's good to talk with you again, my friend. Hope you're doing well.
Been a while. How's it going, Jesse?
Things are good. We were chatting a little bit off air. My March Madness bracket is officially busted as of Friday. So, another year where I'm not going to be a millionaire or anything with a perfect bracket. How about you, Mike?
I'm also in that boat as well. I guess I'm 2 for 2 on the women's side, Jesse, so I'll take that win.
Maybe you'll win on the women's side then. There we go. Well, I know it was a tough one. Iowa State beating South Dakota State. I know your Jackrabbits took the loss there, Mike. So sorry about that. I guess I cheer for the Cyclones being from Iowa a little bit. So I'll hold that over you, I suppose, here a little bit, Mike.
It's eased my pain that I at least had Iowa State winning it all. So I guess you win some, you lose some.
Well, they did look pretty good, so we'll see how the rest of the tournament goes. And, we occupy ourselves with a little bit of March Madness college basketball, maybe to deflect from the fact that we didn't like the market trade on Friday. Soybeans, man, it was such a good week in beans. We got above the 50-day moving average in the May. We had a lot of 12s on the board, and then we kind of fell apart Friday, and I guess I have to think there were some farmers selling on this rally. Maybe you heard something different. I don't know. I mean, talking about soybeans just looked like an ugly kind of technical type close to the week, Mike.
Yeah, after we had a few technical trades there, it seemed like the funds really stopped covering their shorts, and there's been a few reasons there, maybe, right? The export side continues to be ho-hum, a little so-so, nothing to really build on. South America's crop, no major problems for them wrapping up theirs. And with us putting on $1 on the soybean market since the end of February, ahead of next Thursday's report, I guess that's as good of reason as any, is probably just pre-report positioning, Jesse, as much as I hate to say that.
Yeah, well, and that's a good point. We had some decent weather to move some beans maybe as well ahead of, this wintry blast that's coming back through the upper Midwest and whatnot here through the weekend. So, it could be a reason, but to your point, positioning ahead of that report, thinking about that report, obviously, every year it's full of a surprise or 2 or 3 or 4. It's a very important day. And so I've largely said this trade across the board's kind of been going sideways ahead of that report. I mean, your thoughts here, farmers heading into this report, what should we be thinking about and what should we expect? What are you hearing on that acreage front and more here right now, Mike?
Yeah, so when I look at the acreage front, I feel like corn is really the big number that we're going to be focused on. That are we going to ruin the balance sheet hopes for us the rest of the year out of this report or not? Last year you were over 94 million acres of corn, hearing reports of 92 million plus acres of corn out of this report. And basically, if you get below 90, you start to really help out the balance sheet going into this next year. If you're over 90, I think it's just enough that it won't matter at the end of the day, that it's going to be tough to really hurt that balance sheet without significantly poor yields in the United States. So the corn one, I think, is a big number because that's going to really set the table, I think, going forward for the corn market. The soybean market, a lot of 85 to 87 million acres out of the soybean market. So, I mean, on that one, when I look at it, North Dakota is probably your big your big question mark out of the soybean number. And we've been favorable on the board basically since January, end of December, favoring a little bit more on the soybean side for planted acres. But together, I mean, are we really going to push up to 180 million acres of of corn and soybeans in the United States, which that's all we've really done historically, and probably have a pretty good shot of that being a limiting number going forward anyways, given the fact that we continue to lose production acres in states like Iowa every single year. So I'm looking at North Dakota. Are we going to pull back spring wheat acres a little bit, add some canola there, add some soybeans? Those are some of the fringe areas that I'm probably going to focus on with that report, but they like to surprise us, and that's a volatile report most years.
Yeah, very volatile report. So my question to you, heading into some unknowns at a report, I mean, let's think risk management here. What should producers really be considering here in the next few days leading up to that report? Should we be looking to protect some downside risk potentially here in corn, beans, wheat, etc.? I mean, what do you think there, Mike?
Yeah, so I'm going to start with kind of just the most immediate thing, which would be old crop positions here. If you got soybeans in the bin, you know we haven't seen basis levels get hit too hard after putting in $1 of this rally. So I really think that you're going to be crunching time over about the next month to probably start to get rid of some old crop positions on soybeans, especially, and corn for that matter as well. We've put on a nice 30 cents there on corn and really haven't seen basis take a hit yet. So from here on out, I think that's kind of your timetable to really start to lock up some basis levels and take risk off the table there. Going beyond that into next year's crop, I've really tried to use options to try to still have a little bit of upside attainable. Let's start with the corn side. I've been trying to leave a little bit of a window when I'm getting up to that 480 area out of the December 24 corn, and still leave myself some room into the mid fives on my upside. And you're starting to have some favorable costs in those option strategies today that I really like. And then on the soybeans, it's been close, but I'm not quite there yet to really hammer in home on that one for this next year's crop again through some option strategies. But I've kind of started with them, and then I think the next point beyond that, which this likely won't be ahead of the report, Jesse, but as we saw in November knock on the door of $12 here this week early on, we saw heavy resistance there, and we traded like 11.99 and a quarter, right up against it a couple times. And I want to see what we show if we do get back to $5 December corn here. There's a gap right above it. I think there's going to be a lot of sell orders there at $5. So I would really watch that area to make sure that we don't lose out on the bigger picture trying to, be right at $5 or save a few pennies if we do get that opportunity.
Yeah, to that point, feels like maybe some of those sell orders or some of those wish orders, I feel like option volatility's been fairly quiet lately. So maybe thinking about something out
Mhm.
there, at a mark on Discord or above 12 on no beans, just in case we hit it, maybe an overnight rally or something like that. I feel like that there's some opportunity there on new crop, Mike.
March is a really nice time of the year, I think, for buying time value. As you go through the year, we've been in a very sideways pattern in this corn market. Historically, that leaves a very good time frame for you to buy option premium ahead of the growing season and see some of that volatility. So in general, I like right now a lot, especially before we've even got crops in the ground. So that's where I'm going to navigate a lot of my strategies here over the next couple weeks or so.
Yeah, no, it just makes sense. And being a smart marketer here in this window, and too, it's been somewhat of a sideways week. A lot of attention's been on, say, the stock market, for instance, and the money flow there. I mean, record highs set in the stock market on the week, and just it feels like a lot of that money flow has wanted to gravitate that way, and it's given us a little bit of a quieter type of trade in the grains and in the livestock too, Mike.
Definitely. Since about middle of July of 22, when we saw inflation peak, money's been slowly on its way out of commodities. And right away, it was kind of on the way out of commodities and equities, Jesse, right away, because there was concerns about more of a recession and worries that inflation was really going to go up, and we had to combat it with really strong rise in interest rates. And somehow, out of all that, we ended up with a soft landing. It kind of looks like at this point, and since we got to about the end of 23, a lot of money flow had come back into the equities, but not the commodities. And a good hedge for inflation is commodities, equities. I mean, you can dang near buy anything and it makes sense, but there's no real hedge against a recession, and commodities don't look that fantastic when inflation's on the way out. And we've noticed that with money flow and going towards less risky investments. And then obviously this new bubble, you could call it, of just
Mhm.
AI. And the money flows rapidly went into your mega seven stocks. And you can really tell that the money flow just hasn't been there. We haven't had the big bull in the room yet on commodities to really attract a lot of money back here. So maybe if inflation does take off here again for a little bit this early summer time frame, then maybe we could see some money run back towards something like crude oil, kind of fill into corn. Maybe cattle get to have that more blow off top type scenario of major concerns that we've been waiting for. That could be a nice opportunity for taking a lot of risk off the table here if we get something like that. But you got to scare the markets.
Yeah, I don't know about you. I kind of wish I would have bought some Nvidia stock here as of late, no doubt. Just watching some of that money flow
In like
into that
2000.
AI stocks and things like that, and chips and you name it. So, we are talking today
Yeah.
with Mike Miner from Professional Ag Marketing here on Market Talk. Mike, let's touch on hogs. I'd love your perspective in this hog market here, if you can. It's felt like all week we were kind of bumping up against some technical resistance in summer month hogs, but we've seen a real nice rally here as of late, and we ended with some green on the screen Friday. Your take in this hog market right now, Mike?
Well, the main take for it here is going to be most of the weight around the discussion is going to be just on cutout. Demand has driven this market incredibly. And when we start to float up towards that middle 95 type number, I think that looks nice for the next couple weeks. If we can get there and hold it, that's going to be a really nice pattern going forward. The problem is we've floated down into these lower 90s type numbers, and that's showed a lot of concern, I think, in these further out months, showing major premiums, because we are going to need a very high cutout number to really make summer months at 105 make sense. So we've had some really nice opportunities in that hog market through those summer months, but your big topic that's going to control a lot of your trade as your main fundamental is going to just simply be demand going forward.
Does it feel like 104, 105 is probably it just feels like we don't have enough juice to get through that resistance point unless something happens with demand and with that cutout value, Mike?
Exactly. Yep. You're going to have to see something come up next. And from a seasonal perspective, you get around this March timeframe, you can tend to have a seasonal high for that hog market in the summer timeframe here for a little bit before we really get into that potential tight couple weeks through the middle of the summer.
Yeah, I've heard it called the BLT seasonal, so to speak, that bacon time
Yeah.
frame for summer and summer grilling season, etc. My couple thoughts in cattle too kind of ended with some hesitation Friday ahead of the cattle on feed report. Largely, it feels like cattle too have kind of been in the same boat as hogs. We've gotten this market a nice rally again, but maybe going a bit sideways here. Any thoughts for you in cattle?
Yeah, so today you've seen some really interesting activity here in the last 24 hours or so, and it's something we hadn't seen in a little while, which is actually producers taking massive risk off in the marketplace. And I think it stems back to this idea that, Kansas, that plant, here being closed for the today and yesterday because of that refrigerated container trailer that was on fire here on Wednesday night. They're looking to regain normal operations on March 25th on Monday there. So them losing, a good 12,000, they kill about 6 a day. So a good 12,000 head kill already. It brings back a risk into this marketplace that we haven't seen probably. We remember what 2019 was and the impact that those fires had on this marketplace. And it's a great reminder as we've recovered this market nicely, had fantastic retracement, and we're in a really elevated high price level point compared to history, that there's risk in this marketplace. There always is, but we get that reminder once in a while. And I think this was one of those reminders that producers have just said, you know what, I have a ton of capital tied up in these things. It would be a shame if a black swan would fly over and have something happen. So I think that's what a lot of it is. And obviously, cattle on feed report today coming out. We'll see what that shows. Last year showed a really tight number. So 106 expected for placements out of this report. We'll see what we find today, but most of the time it seems like this market forgets about it by Monday morning, anyways.
No, that's very, very true. I would agree with you on that. Short-term memory, it seems, in this cattle trade right now. Mike, great stuff. Before we let you go, any final thoughts you would want to share or reiterate with folks here today?
Yeah, I'm going to watch the wheat market quite aggressively. The US dollar here this week after the Fed news on Wednesday came out and showed that they expected 3 more rate cuts here through the rest of this year still, which was a little aggressive, probably for what a lot of people would like. So Wednesday, you saw a retracement, a setback in that US dollar, and then you saw quite a bit of money pour into something like soybeans that day. And then the day after, the market kind of called it on it and said, maybe it's not 3. Maybe that's not as realistic. And the US dollar, it kind of started to go up after that, I think. And the market started to really show that. And I think that U.S. dollar activity has really had a lot of impact on some of these grain markets like wheat. And seeing that wheat market at relatively low levels compared to where the rest of the grain complex is, like corn, and seeing how much of an impact a state like Russia has, a country like Russia, and today's marketplace makes that market incredibly vulnerable. So I'm really looking forward to seeing what wheat does here over the next couple months and what impacts the US dollar has on some of those grain markets.
Well, with that, we will wrap it up. Mike, if folks have questions, want to reach out to you and the team there, Professional Ag Marketing, I know online, phone call, a lot of great ways to get in touch, isn't there, Mike?
Yeah, professionalagmarketing.com. And you can give us a call anytime here at 507 449 2030 or find me any other way. Pretty easily accessible. So,
I know you're on social media and all that good stuff too, and online, of course. A lot of great ways to get in touch with Mike Miner from Professional Ag Marketing. Mike, it's good to chat with you again. Thanks for joining us, and we'll talk to you again real soon.
thank you, Jesse.
That's going to do it for Market Talk today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.